The top stories live from the Sky News City studio. Breaking news, the former Italian Prime Minister Silvio Berlusconi has died at the age of 86. Also this hour, American companies say they're losing confidence in investing in the UK. Rishi Sunak calls for Britain to become a global leader in business technology investment as London Tech Week gets underway. A rebrand for the former UK arm of Silicon Valley Bank as HSBC unveils its new tech banking plans. Plus, new research suggests students want a wider range of technology subjects at school, including esports. Good morning, this is Ian King live in our business and economic news from the heart of the city. Well, we start this out with some breaking news. The former Italian Prime Minister Silvio Berlusconi has died. The 86-year-old media tycoon had been treated in hospital for a lung infection linked to chronic leukemia. He led the country 3 times from 1994 to 95, 2001 to 2006 and 2008 to 2011. During his last term in office, Italy came close to a Greek-style debt crisis and he faced numerous scandals, most notably around his notorious bunga bunga parties. Our Europe correspondent Adam Parsons has been taking a look back at his life and career.
He was impossible to ignore. Silvio Berlusconi was a giant figure in Italian life for decades on end, in politics, business, sport and on the global stage. His fortune was built on broadcasting. He constructed a media empire and made a vast fortune. He spent some of that on moulding AC Milan into Europe's best football team, and then turned his attention to politics. From the centre-right, he led 4 separate governments, spending more time as Prime Minister than any other post-war Italian politician.
We find Silvio Berlusconi guilty.
But it was never straightforward. Berlusconi was cited in dozens of criminal investigations, mostly around claims of fraud. He said that was persecution and claimed to have been in court 2,500 times. Trouble did follow him. Remember this woman? A Moroccan dancer nicknamed Ruby Heartstealer. Berlusconi was convicted of paying her for sex when she was just 17 years old at one of his lavish bunga bunga parties.
They were taking part in a burlesque competition, and they trained for it because these women, by their very nature, are exhibitionists. They are showgirls and like to put on a show and compete.
But he won an appeal and laughed off the scandal. Bunga bunga became a catchphrase, not a source of shame. Then came a conviction for tax fraud that he couldn't beat. Berlusconi was at his lowest ebb and protested furiously on one of his own TV stations.
In exchange for the commitments I have made over almost 20 years in favour of my country and coming almost to the end of my public life, I receive as a reward accusations and a verdict that is founded on absolutely nothing, that takes away my personal freedom and my political rights.
He was a global figure. He hosted 3 G8 meetings. That is a record. But his brand of diplomacy was eccentric. He famously left Angela Merkel hanging around while he took a phone call. Eventually, she walked off. He once welcomed a Spanish Prime Minister warmly to Italy, only to cheerfully stroll away from their joint scheduled press conference, leaving José Zapatero utterly bemused. But Berlusconi was blessed with an infectious smile. Rolling Stone magazine once named him their rock star of the year.
He had charisma and he knew how to get in touch with people, and even if sometimes he could look like a little bit strange, eccentric, but at the end he was a very friendly person.
Remarkably, he returned to politics once more, part of the coalition that pushed Giorgia Meloni into power, still a political heavyweight into his late 80s. Silvio Berlusconi was a man who lived for the spotlight.
Joining me on the line now is our Europe correspondent, Siobhan Robbins. I mean, Siobhan, before he became a politician, he was, of course, one of Italy's most successful ever business people. A lot of questions about what happens to his business empire, but I guess also what happens to Italy's ruling coalition, of which he was a part.
Yes, so as you say, and as Adam was just reporting there, he was a media mogul, a billionaire, and in the 1970s he created his first cable TV company, and by the 80s he was basically ruling the airwaves here in Italy. He went on to invest in a range of other businesses, so having involvement in AC Milan Football Club, for example, in shopping centres, but then, of course, this huge figure on the Italian political scene as well, nicknamed the Kingmaker role. And he had 3 different stints leading the country here. One of those made him the longest-serving Prime Minister that Italy has seen. And that's despite the fact that he was linked to so many scandals, of course, the infamous Bunga Bunga scandals, but also a tax fraud conviction, allegations of corruption as well. And despite the fact that he was 86, he was still playing a huge part in politics. His Forza Italia party was part of the ruling coalition. He also was a senator himself, but we have seen his health deteriorating. In the last decade, he had open heart surgery. And then since the end of last year, there has really been a marked deterioration in his health. He'd been in hospital for around 6 weeks being treated for complications with leukemia. He'd come out and then on Friday gone back for what we're told was
how long it will take to cremate
to see how he was. Doctors weren't happy then with the results of the test, decided to keep him in. And then today, sources told us that his health really had deteriorated, that his family had gone to his bedside, and it's now been confirmed both by a source within the hospital, but also from local media here, that Silvio Berlusconi has died at the age of 86.
Thanks, Siobhan. Now, Joe Biden and Rishi Sunak last week agreed an Atlantic declaration to strengthen economic ties between the US and the UK. But research published today suggests that US companies operating in the UK are losing confidence in Britain's business environment. The 3rd edition of the Transatlantic Confidence Index, issued by British American Business and Bain & Company, suggests higher corporate taxes and Brexit are the 2 factors behind the weakening of confidence. Well, joining me now is Duncan Edwards. He's Chief Executive of British American Business. Duncan, morning to you. How many companies did you speak to here?
We spoke to over 80 companies, so 56 large US companies that invest in the UK. So it's most of them very large companies, so representing a very good cross-section of US investment into the UK economy.
And is this mainly down to Brexit and corporate taxes?
There's a few issues that were highlighted. I think ongoing concern about the UK's relationship with the EU. And bear in mind, this survey was done just after the Windsor Framework was agreed. So whether the full impact of the Windsor Framework had filtered through to executives thinking, we probably think it hasn't yet. But yes, so friction between the UK and the EU, rising corporation taxes, and in fact the tax burden throughout the P&L of US companies that are here. And then a sense that the regulatory burden across every industry, instead of being alleviated with Brexit, has actually increased. So these are concerns. I would say that whilst sentiment is down, behaviour continues to be pretty robust. So US companies continue to choose the UK as their preferred place to invest in the European geography.
What in reality can be done about this? I mean, the government itself has just imposed all these high corporate taxes, and no party is going to be brave enough to call for a return to the EU anytime soon.
Well, I think on your point about the EU, you're right. On corporation tax, we really do hope that future governments take a long, hard look at the burden they're placing on companies that choose to do business here. I also think, by the way, the Atlantic Declaration that was agreed last week is a very, very positive move. It signals intent by both sides to negotiate a more liberalised and coherent environment between the US and the UK. There's a huge amount of work to be done, though, to make what was essentially a set of intentions into a set of agreements. But we wish them luck with that.
Well, quite so. I mean, we are still a long way off a comprehensive free trade agreement, aren't we?
Yeah, look, I think we've known for a while now that certainly under this administration in the US, there is no realistic likelihood of a free trade agreement. That's not on the agenda, not just for the UK, by the way, but for any country. The US made that very clear at the start of the Biden administration that they are seeking to invest in their own economy, and they're very focused on US workers, and that prohibits trade agreements.
Obviously, though, we've just joined the Pacific Free Trade Agreement deal, the CPTPS. Is that potentially the way to a backdoor deal with the US?
Well, who knows? I mean, I think everyone was a bit surprised 5 years ago when the US didn't join the CPTPP because they'd been the driving force behind it. And now with the UK joining, that possibly gives the US a reason to think again. But again, under this administration, I think that's extremely unlikely.
Does that change if Donald Trump returns to office?
Well, certainly. I mean, for whatever you think of the previous president, he was keen to negotiate an agreement with the UK. And they got pretty close before the election. But he also ruled out the CPTPP membership. So probably you shouldn't hold your breath for that one.
OK, Duncan, good to see you this morning. Thank you.
Thanks.
Now, today marks the start of London Tech Week, a week-long festival celebrating the best of tech and bringing together founders, business leaders, policymakers and investors. Well, speaking at the event in the last few minutes, Rishi Sunak said the government planned to make the UK the best place in the world for tech businesses to launch.
We are an island of innovation, but at a moment like this, when the tectonic plates of technology are shifting, not just in AI, but in quantum, synthetic biology, semiconductors and much more, we cannot rest satisfied with where we stand. We must act, and act quickly if we want not only to retain our position as one of the world's tech capitals, but to go even further and make this the best country in the world to start, grow, and invest in tech businesses. That is my goal, and I feel a sense of urgency and responsibility to make sure that we seize it. Because one of my 5 priorities is to grow our economy. And the more we innovate, the more we grow.
Well, we're going to be bringing you interviews all week from London Tech Week. And to kick things off today, we're going to hear from the co-founder of one of the businesses that has done most to reshape the world of work in recent years and which is now at the heart of the debate about hybrid working. Carl Henderson is co-founder and chief technology officer of Slack, the instant messaging and collaboration platform for businesses. Carl, very good to see you this morning. How has the return to the office changed the way that people are using Slack?
I think when we started Slack before the pandemic, almost a decade ago, we were in the old default way of working, which meant most people were in the office every day. Although as you look at any large organization, every multinational is always being distributed, right? And so as we went through the pandemic and saw everybody work from home overnight, we started to see that roll back. But it's definitely the cat's out of the bag in terms of how productive organizations can be when people work from home. So I think we're never going to see a full reversion. Today, knowledge workers in the UK, Office of National Statistics, have recently released study show that somewhere between 1/3 and 40% of knowledge workers in the UK now have a hybrid setup, so working from home at least some portion of the week. And that demand for that is even higher, up as high as 2/3. So I think while we've seen a number of people come back to the office, we're never going to go back to the way we were 3 or 4 years ago.
Now, you were bought by Salesforce just under 2 years ago for $27 billion. How difficult is it being to maintain that kind of startup mentality now you're part of a great big corporate?
At the time we were acquired, we were already a sizable public company with thousands of employees, but definitely joining a company 20 times the size of us is a very different kind of environment. And I think it is as much about mindset as it is about scale, about how you operate, how you think about building products and bringing them to market, and how you listen and respond to customer feedback. We are a decade old, but still feel like quite a young company, and that the world of work is changing so much now with the pandemic and also with the partial return to office afterwards, that I think there's still a real opportunity for us to remain nimble and understand how the world is changing. I think the world of work is changing now faster than it ever has before. In some ways, the pandemic, accelerated that change by maybe a decade or more kind of overnight. So I think the pace of change with changes that are even happening this year, I think, is only going to continue.
Now, you face a lot of competition, not least from Microsoft Teams. I know there's a case going on that you can't talk about, but more broadly, how are you evolving the product to see off that competition?
I think that we're trying to look at uniquely ways in which we can help support companies in this era as we move into a much more hybrid role. So thinking about what are the unique things that are good about being in an office, what are the unique things that are good about working from home, and how we can bridge that gap to help organizations who are hybrid be more productive. And I think every organization is figuring this out, right? How they can maintain the level of productivity that they saw during the pandemic, but also help augment some of the activities that are just better done in person. We especially see this in industries like finance or sales roles where there's a strong apprenticeship model, and being in the office and working alongside people and watching how they work is a huge part of understanding how to do the job. And I think features that we've added in the last couple of years in Slack include things like huddles, which is a very easy way to just start an audio conversation with somebody immediately, the equivalent of walking up to them in the office and tapping them on the shoulder. So I think it's how can we think about features and kind of experiences that replace what's great about being in the office, but you still get the opportunity of hybrid and that strong demand that people have for flexibility in time and location of where they work.
And what about AI?
I think AI is really, really interesting. I think it's, in some ways, this kind of acceleration that we've seen in kind of work changing is going to continue because of AI. I think it's still very early days. We don't understand quite the impact that it's going to have, but definitely the thing that's most interesting in the workplace is, can it continue to accelerate individual productivity? And if just one company had these AI capabilities, then we'd see them move far ahead and be able to be far more productive. But these are tools that are available to every organization. So I think we're going to see every kind of organization of knowledge workers in every industry utilize AI to get more productivity out of their existing workforce.
Cal, there's so much more I wanted to ask you, but we're out of time, I'm afraid. Come back and see us again, please. Thank you. Some other business news stories for you now. And the Swiss banking giant UBS said this morning it's completed its takeover of domestic rival Credit Suisse. Well, UBS rode to the rescue of its rival in March in a $3.25 billion deal orchestrated by the Swiss government after markets lost confidence in Credit Suisse following a series of mishaps. Well, the final hurdle to the takeover was crossed on Friday afternoon when the Swiss government agreed that it would backstop UBS to the tune of $10 billion to protect it from any losses related to the takeover. The online electrical goods retailer AO World and Mike Ashley's retail combine Frasers Group said today they were forming a strategic partnership. It comes after the pair confirmed news broken by Sky's Mark Kleinman over the weekend that Frasers had acquired an 18.9% stake in AO World. Well, that stake was previously held by Odey Asset Management, the hedge fund manager whose founder Crispin Odey has been hit by a wave of sexual misconduct allegations. The pair said the investment was a culmination of productive talks over the last 2 years about establishing a strategic partnership. The mining and commodity trading giant Glencore has offered to buy the metallurgical coal business of Canadian miner Teck Resources. Well, the offer comes after Teck twice rejected a $22.5 billion approach for a full takeover of the company, arguing it wanted to be left to pursue its own plan to split itself into a metals business and a separate coal company. It said last week it had received several approaches for its metallurgical coal arm. Well, metallurgical coal, sometimes known as coking coal, is an essential ingredient in the steel-making process. Well, Wall Street's solid finish on Friday evening, during which the Nasdaq completed a 7th successive week of gains, was followed by a largely positive session overnight for equities in the Asia-Pacific region. There you go. All of the main indices in positive territory there, apart from Shanghai. You can ignore the ASX in the bottom right-hand corner. The Australian market was closed today for a public holiday. In Europe, stocks have also traded largely to the upside so far this morning. Here's the current picture. All of the main continental European indices doing pretty well. Their talking points today include Novartis. The Swiss drug maker is ahead by some 1% in Zurich after it agreed to buy the US biotech firm Chinook Technologies for $3.5 billion. Well, here in London, the FTSE 100 is also in positive territory, albeit up by only a fifth of 1%. It's a broad-based rally right now. The leading blue chip gainer in percentage terms is Ocado. Shares up 6 6.5% nearly there. It hit its lowest level in a year on Friday, and that looks to have attracted a few bargain hunters crawling out of the woodwork. On the downside, the industrial warehouse landlord Segro, the shares there are off some 2% on adverse broker comment. Outside the FTSE 100, the IT services group Kainos is up 6.75%. That's also on broker comment, and Wizz Air is up by 4% or so for similar reasons. To the downside, Tullow Oil, you can see there on the screen, down nearly 1.75%. The company said this morning it's considering options for its interests in Côte d'Ivoire. On the foreign exchange markets, well, all eyes this week on a lot of big central bank decisions. You've got the Fed, the European Central Bank and the Bank of Japan all making rates decisions today. Sterling up by just over 1/7% right now against the US dollar. It's off by 1/10% against the euro. The single currency, meanwhile, up 1/4% against the dollar. As for the oil price, well, that has continued to drift this morning amid concerns over global demand. A barrel of Brent crude will currently set you back $72.70 a barrel. That is down by just over 2.75% on the session. Well, joining me this morning is Russ Mould. He's the investment director at AJ Bell. Russ, good
morning,
to see you this morning.
Thank you.
Well, let's start with oil. I mean, that's a week or so ago, we had this news from OPEC that the Saudis want to cut production again. The market's just brushed it off.
That's the second OPEC plus policy move and production cut, and the market hasn't shown any interest. I guess what's interesting is the oil market is saying there's a global slowdown, there's potentially recession coming. The equity and stock market is saying, actually, no, we think everything's going to be OK, thank you very much. So on balance, one of them is going to be wrong, you would think. And if you're an oil trader who've got it wrong, it could be very uncomfortable. There are suggestions of a big short position against oil. So if it starts to go up, traders will need to buy the oil back to cover their positions. The Americans have run their strategic petroleum reserve down to its lowest level since 1983. And if the recession forecast is wrong and the International Energy Agency is correct and oil demand keeps growing this year, it's actually not that hard to construct quite a bullish scenario for oil, despite all of the prevailing gloom. The people who won't want to hear that, central bankers with inflation targets and consumers, because they'll be seeing the price at the pump go back up again. So it's a very, very important area, oil, and it's nice to see for most people oil going down, but again, OPEC will clearly be doing its best to stop it at around $70.
You mentioned there's a big short position.
Allegedly so, yeah.
Do we know who's behind that?
I think it's just traders. I think the Wall Street Journal quoted a figure of 50 or 60 super tankers worth, which is quite an intriguing number. But I think it's about 50 million barrels or something like that, allegedly. So half a day's production. Not enormous, but if there are lots of people looking to close out in a hurry, all those elephants can't get through the same cat flap.
That's fascinating. Now, let's talk about some corporate news. UBS finally cleared up Credit Suisse today. I mean, the more this goes on, it still looks like a great deal, this, for UBS,
The price that they've paid, you would assume, is sufficiently low to protect them against virtually anything. It was, 10 cents on the dollar or less or something like that? I mean, there are clearly lots of hurdles to overcome. When they did their initial accounting, the gain that they wrote through on that wasn't as big as some analysts expected. So again, they've covered themselves a little bit more by not getting too carried away. An interesting colour in some of the journals today about how UBS's CEO and chairman are laying down the law to Credit Suisse bankers, countries they can't deal with, businesses they can't get involved with, to say, look, I think the phrase was cultural contamination that was used, which is pretty strong stuff as banking goes. So they're saying, look, UBS does it this way, it's our way or the highway. Credit Suisse has got itself in lots of trouble. If you want to keep your job, it's now our way. Thank you very much indeed.
Yeah. Now, what about this tie between AO World and Frasers?
Yeah, but I suppose a little bit like welcome to the new boss, same as the old boss, I suppose, in that Michael Murray is Mr. Ashley's son-in-law, but he's obviously considering with a similar process of, frankly, first of all, I think probably looking for a bargain. Again, the shares are down way from their high at AO World. I know they've rallied a bit this year, so there's always that option. Fraser's saying it's just a shareholding. It's not a precursor to anything more dramatic like a takeover. So there's the value element, and also you can see why. I mean, Fraser's has got a big white goods business. It's not necessarily where Sports Direct came from. So there's expertise to be had there, and I'm sure there's brand cross-fertilisation the two can do as well when they cooperate.
Now, the one thing that interested me, Mark Kleiman broke this on Saturday, and the point is this is a stake previously owned by Odey. Now, it feels like, to me, if I was in there in the market, I'd just be going through Odey's portfolio now, seeing what else they might have to sell.
I am sure every trader, hedge fund manager and everything else will be looking exactly what they've got and then probably quite carefully either taking evasive action or moving the price against them to make life as uncomfortable for them as they can to maximise the opportunities that are available. It sounds cruel, and it is, but there are no better investments than those made from a forced or distressed seller. So it's now up to the Oadey Group, whatever the FCA inquiry finds and however it's handled internally, and these are clearly very serious allegations, it's now up to them to reassure their investors that it wasn't a one-person band, that there is a strong process there is a strong team there who can continue to provide the returns that the organisation did under its previous leadership. And if they can't do that satisfactorily, and it's going to take time, then there is a concern that some investors may head for the door, and that's why these stories going around that there may be some fund trading suspended while they try and get things sorted out.
Yeah, when the market smells blood, eh? Russ, good to see you this morning.
Pleasure.
Thank you. Still to come here on Ian King Live. More from London Tech Week as we ask how the UK can retain its leadership in tech investment. Stay with us. Welcome back. Now back to London Tech Week, which this week celebrates its 10th such event. That's a testament to the UK's leadership in tech. UK tech firms raised just shy of $30 billion in venture capital funding last year, making the UK the third largest country worldwide for tech investment behind the US and China. But how does the UK retain that leadership? Well, joining me now is the Chief Executive of London & Partners, Laura Sitter. And Laura, welcome to you. I mean, the UK can't rest on its laurels here. That's the key message.
Absolutely. And as we go into this 10th year of London Tech Week, it's a time for us to cast our minds back and see what we've achieved over the last 10 years. Go back 10 years, the idea of Silicon Roundabout was still quite new. Tech was this nascent industry. It was all about startups in a sort of a cluster in East London. We had about 10 unicorns, which is businesses valued over $1 billion. And today we have over 100. We have seen the most investment into the UK from international tech companies of any country in the world. So there's lots to be really pleased with, and we should be really proud of our leadership position. But obviously, London Tech Week is all about saying, OK, what's next?
Yeah, you can't talk about Silicon Roundabout anymore, by the way. Transport for London have just turned it into a traffic jam 24 hours a day. I mean, which are the sectors doing best in tech right now?
So for London, the sectors that are doing really well are those where we had an established strength and then we combined it with technology, because that's what London's really good at. So obviously fintech has always been a real strength because we're a global financial centre. Some of the creative industries technologies like gaming, immersive, we've done really well in. Fashion tech, very strong, and life sciences, so all the health tech and biotech, we've done really well. The sector that's really come out of the blocks in London, though, over the last few years is climate tech, so all the green, sustainable technologies, where we're really emerging as a leading centre, and I think that's really exciting.
How worried would you be that the sort of backlash that we're seeing against the transition now from some consumers and business groups is going to derail that investment?
I think we're continuing to see really strong investment into green tech companies, and a lot of what they do is make it easier for consumers to make the right choices. So two businesses that I love are Olio, where you can give away free food. That's a London-based business, great success story. Another example from the circular economy is Backmarket. Originally a French business, did a big expansion into London, and that's where you can buy second-hand computers and phones. So those kinds of businesses are hopefully making it easier for us to all live a more sustainable life, and that's how we help people to come on that green journey.
Yeah, and we've had both those companies on this programme. Are the sort of people that are attending this event changing?
Yes, so we're seeing lots more international visitors, which is fantastic. So we've got about 20,000 people coming to London Tech Week this year. About a third of those are coming in from outside the UK, and that's fantastic. But it's testament to the way London is really this international centre for technology. We are the dominant European tech city. We have twice as much VC funds as Paris or Berlin, twice as many unicorns. And I think this week and the scale of international visitors shows that real international nature of London.
All right, Laura, there's loads more I wanted to ask you, but we're right out of time today. Really tight, I'm afraid. Good to see you. Thank you.
Thank you.
Well, during the last hour, Rishi Sunak's been asked at London Tech Week about the resignation as an MP of Boris Johnson and his controversial honours list. Here's what he said.
Boris Johnson asked me to do something that I wasn't prepared to do because I didn't think it was right. That was to either overrule the HOLAC committee or to make promises with people. Now, I wasn't prepared to do that. As I said, I didn't think it was right. And if people don't like that, then tough. When I got this job, Yeah, when I got this job, I said I was going to do things differently because I wanted to change politics, and that's what I'm doing.
Well, earlier this year, we covered the launch of the third Black Founders Fund by Google for startups, under which the tech giant provides funding and for startups founded by black entrepreneurs. It's aimed at addressing the racial inequality in venture capital funding, less than 1% of which went to UK black-led startups in 2020. Well, today, the 10 companies that will qualify for a total of $4 million worth of funding have been named. And joining me now to talk about this is Mariama Boumanjal. She's Google for Startups Black Founders Fund Manager for Europe and Africa. Very good to see you this morning. Tell me about some of the companies that have got funding.
Yeah, super excited. So today we announced 10 out of the 40 companies. So it just shows like 10 of the companies are UK-based. Not any other country across Europe and Africa has actually so many startups represented. And we have Theo from Slinger, who's actually using technology to address the shortage of hospitality workers, trying to really connect hospitality workers, 10.3 million in the UK alone, with living wage opportunities. Another one is Sarah from Husmos. She's actually trying to make the rental more affordable by providing tenants with an insurance product. We do have Lottie from Maya Masters. She wants to make sure that athletes perform really well on a daily basis and prevent insurance. Prevent any athletic, how do you say? Making sure that they don't break a leg, basically.
Okay. What about, what did they have to do to get funding?
I mean, to be honest, this year was a very tough process. We received 4,000 applications.
Wow.
And of which we gave 40 equity-free grants. So it just shows. We shortlisted at 150, interviewed 150, and then we had an army of Googlers, senior Googlers across different organizations, interviewing the founders. And then we had a selection committee that is made out of the exec leadership, GV, Google Cloud, sales, people who really understand startups and fundraising. And yeah, so it was a really tough process for founders to get through and to make it to the top 40.
And it's not just funding and support from Google that they get. I mean, they're getting free airtime from ITV, they're getting
Correct.
legal support from Allen & Overy. I mean, it's quite a comprehensive package.
Correct. I mean, it's really exciting to see that we launched the fund in 2021 and so many other organizations have either joined us and partnered with us or actually launched similar initiatives where we know for a fact that funding plus programming is a very successful combination. We heard before that black founders specifically, are over-mentored but underfunded. But now we actually provide them with funding, but at the same time help them to further grow their businesses with the best of Google, but then as well through our partners.
And what happens after a year?
This is the third time we're doing it. If I look now at the founders from cohort number 1 in 2021, so we have, for example, Christian Elberfeld from AudioMob, a UK-based company, and they do audio-intrusive gaming ads. So they now raised their Series A. They launched into the US, they launched into the Middle East, they created hundreds of jobs. Same with Richard Robinson. He is the founder of Robin AI. He was tired of being a lawyer and writing so many contracts over and over again that he used AI to create and edit contracts. So he just recently closed his Series A as well. And he has right now 75 full-time employees made out of 30 lawyers, software engineers, and he's about to use his Series A to hire another 100 and to scale again across the US and as well some other regions. So you can really see how when we started working with them, they had less than 10 employees. They were just UK-based. And now, just 2 years later, we already seen the huge impact they are having, not only in the UK, but as well globally.
And does Google end up taking an equity stake in any of these businesses?
No, we don't. It's equity-free granting. We believe that black founders are locked out of access to funding, and this is where we provide them immediately with funding that they can use it to hire the right people and really grow their businesses. And especially hiring is one of the key components that the founders use the funding for, and making sure that they have the right people on the team to help them grow their businesses.
All right, Mariama, got to leave it there. Good to see you this morning.
Thank you so much.
Time for a look at this morning's business pages now. And the Financial Times splashes its print edition with Nicola Sturgeon's arrest yesterday, but also on its front page reports that EU funds managed by Odey Asset Management are discussing restrictions on investors' withdrawals as part of emergency measures to contain the fallout of sexual misconduct allegations against the hedge fund manager. Well, the Times leads its business pages with news that two more forecasters have predicted the UK will avoid a recession this year. It says KPMG now expects the UK economy to grow by 0.3% this year, while the CBI is predicting an expansion of 0.4%. The paper also carries on its business front page a warning from the National Audit Office that HMRC's delayed programme to digitise the tax system is expected to cost at least 5 times its £226 million estimate in real terms. Well, that story also makes the lead in the business section of the Daily Telegraph, which also reports that the billionaire investor George Soros has handed over leadership of his business empire to his 37-year-old son, Alexander. Let's get more now from the Sun's business editor, Ashley Armstrong. Ashley, welcome to you. You want to talk about a story that I haven't mentioned at all yet?
Well, yeah, I mean, there's a lot kind of packed in the papers this morning, but one thing that did catch my eye was Catherine Mann has written an essay published by the Resolution Foundation, and it's really tackling this thing that we've talked about intergenerational tensions, and that's really because older workers are retiring early. And she raises the question of if they're retiring early, and as we know, the problems are kind of productivity, labour shortages, who's going to be paying that tax burden? And if it is the young, through higher, younger workers, I should stress, through higher tax burdens, then that will increase the tensions even further. And I just think that this is one of those points that, you know, we're hearing these debates. How are we going to kind of change the workforce? We know younger workers are wanting different things, and also retirees have got fairly good lives. You know, they've got kind of a different sort of house wealth than most others. It's a debate that I think is going to run and run.
It really is. I mean, you're going to get some people throwing things at the TV now saying not all retired people are well off, you know, because obviously there aren't. But in general, the point holds. I mean, a lot of it is due to the fact that they've got very generous final salary pensions, which we haven't.
Yeah, no, that's a big chunk of it as well. But also, you know, there's a lot talked about, and every time we talk about mortgage rates, I invariably get lots of letters saying when I paid my mortgage it was 15%. And yes, mortgage rates were a lot higher, but kind of indebtedness was much lower. And also just housing affordability was much easier then. It was only 3 times salary rather than having to save 13 years for a first-time buyer. So.
And there was also something called MIRAS, mortgage interest related source, which you wrote off against your tax bill, which you don't have anymore.
No. So there's all those perks. So I thought that was a really interesting piece, actually.
Also caught your eye, a piece in the FT concerning Huck Group, or THG as it's now called.
Yeah, well, it's sort of a mastermind pet subject of mine, THG, and all of its weird vagaries and flouting of corporate governance. And again, you know, actually kind of the shareholder advisory groups, ISS and Glass Lewis, who are often kind of criticised for being kind of overly cautious, overly box-ticking in their regard. But they've signalled Ian McDonald, who is known, you know, as a major investor in Boohoo and other e-commerce companies, and said maybe he's not so independent. And I would say, no, he's not that independent because, you know, he's on LinkedIn pretty much every other week, giving very fawning remarks to Matt Moulding, the founder. And also he tried to buy the business not even a year ago with King Capital. So it is interesting, and it's kind of one of those things that, you know, we want to celebrate, and you know, as Tech Week is going on, we want to celebrate these tech entrepreneurs and you know, kind of make London more attractive. But I think we should also hold on to some of our standards of governance and, you know, call it out when actually a boardroom isn't being kind of held to as much account as it should be.
All right, Ashley, got to leave it there. Great to see you as ever. Thank you. Now, 3 months ago, HSBC rescued the UK arm of the failed lender Silicon Valley Bank, buying the business for a symbolic £1. Well, today, to coincide with the start of London Tech Week, it's unveiled further details on its plans. It's rechristening the business HSBC Innovation Banking. The bank also revealed it's hired teams of lenders in the United States, Israel and Hong Kong, on top of the 650 staff that came with SVB UK, who specialise in lending to the tech and life sciences sectors. Well, the chief executive of HSBC, Ian Stewart, joins me now, Chief Executive of HSBC UK, of course. Ian, welcome to you. Tell me first of all about these new recruits. Where have they come from?
Well, we've recruited teams in the United States, in Israel, and we are just finalising bringing on a team in Hong Kong as well. And these are people who have been in the innovation market for a long time, but with the demise of Silicon Valley Bank, we're keen to come and join progressive, forward-thinking, which I think we absolutely are at HSBC. We're very excited about the launch day of HSBC Innovation Banking, and it sets out our stall, I hope, for the next 10 to 20 years, because, as I've said to you before, Ian, I think we'll be talking about innovation and the journey to net zero for many, many years to come, and they cross over.
Are you being like a football manager here, Ian, and having to sort of bust your salary structure to get these specialist lenders on?
Oh, isn't that a great question? No, we are trying to be pragmatic, but always when you're looking for good talent, you pay the market rate to get the best people, and we have got an ambition to hire the absolute best people we can, because as I said just there, I mean, we see this as a long-term play, and very excited about it. We are too.
Are you mainly targeting startups here, or are you after more mature businesses in the tech life sciences space as well?
Well, do you know, it's really interesting, Ian, because this morning the Prime Minister and the Chancellor both spoke about this. So start-up funding is crucially important. If you ask any entrepreneur, they'll say that, how do I get the funding? But there's also a challenge today about second, third stage. And the way we are positioning the global business, HSBC Innovation Banking globally, is we will be there for seed all the way through to IPO. And we think we are uniquely positioned to do that. And that's what makes the overall proposition very exciting. But yeah, making sure customers and investors have got access to capital is really important.
I advised you this before, Ian, but let's just see whether you can still hit that note. I mean, is HSBC sufficiently culturally attuned to lending to startups?
Well, Ian, I've been at so many events and I've said, look, please, we need you to keep and preserve what you've got. And that's exactly what we've promised to do. And in fact, the Chancellor said this morning to me, look, it was a trust play in HSBC. So I've given the commitment, as has my Group Chief Executive, we will not let you down on that trust. So let me just explain what we're going to do. We're still just doing the integration work as we speak. So that's probably going to take another 4, 5, 6 weeks. Once that is done, then we've got 3 phases in the plan. The first one is to protect what we've bought, make sure we preserve the people, the products, and look after our customers. The customers expect no less. The second phase is we will start to add on all the great products and services HSBC offer, and that's where you get seed to IPO. And that is equally exciting. And then third point is to take it globally, and we've announced that this morning, and that is live today. It'll take a little bit of time to get going, but we have got a global ambition for the innovation market, and we've set out that stall this morning.
Are you going to have to change your risk models, though? Because a lot of these businesses have a very different risk profile from a lot of the corporates that you traditionally lend to.
Yes, I mean, we have said we will preserve what SVB did in the market. That means we have got to do that going forward as part of HSBC Innovation Banking. Now, you are aware, Ian, we got some carve-outs from the ring fence, so we're going to continue to run this part of the bank separately. It's going to keep its offices here in London, in Finsbury Square. They've just been decked out in all the new logos and the marketing material over the weekend, and that keeps its identity. It keeps its culture, and we are going to try and work with that, embellish it, make it even better, but we have to preserve what we've bought. That's a key ingredient of our go-forward plan.
Look, while we've got you, obviously last week you paused the availability of a number of your mortgage products. What was going on there?
Yeah, well, Ian, thanks for raising that. Let me just explain what happened. I don't think the media was terrific on it, and it's actually not helpful that people get news which isn't accurate. So on Thursday, we had to pause for a few hours our mortgage products to brokers. But let me explain why that happened. We made a commitment right at the tail end of last year that we were going to help our customers through this very difficult period. That means we were going to keep our mortgage rates as low, as competitive as we could. Now, what happens when you do that is your products are in demand. And last week, with other products coming off the market or prices going up, we'd made a conscious decision to hold our pricing. That created a quite significant spike in demand on Thursday, which, in all honesty, we could not cope with that demand. And if we just say to people, yes, it's okay, we'll do it, then you can't complete on the paperwork and you end up letting customers down. So we took the decision that we would pause for a couple of hours. We were back open again on Friday, and again, we'll have to monitor it. So what I would say is I apologise to the brokers. I'm sorry if we let you down. We could not cope with that demand. But I'm not going to apologise for trying to look after our loyal customers in what I think is a very difficult situation with rates continuing to increase. But we're here to support our customers throughout.
Are you actively chasing market share in mortgages right now?
Well, we had a lot of market share come to us last weekend. My first priority is to look after the customers who are with us today, obviously, but we also want to be, really good citizens in the UK economy. And if people do want to join the HSBC family, then we want to make that happen. First priority has to be our loyal customers that we've got. Wouldn't say I was actively out chasing hard in the market for all the reasons that you will understand, but we're here to serve, and we really must look after people at this, I think, quite challenging time.
How many of your mortgage customers come off fixed rate deals this year, Ian?
300,000 customers will be impacted this year, so it's significant. And if you took a mortgage, let me say, maybe 2 years ago or 5 years ago, myself included, you'll come off a mortgage rate, I would guess around 1.5%, something in that area. And your new mortgage is going to cost something closer to 5%. So this is not a subject to be flippant on. This is a very, very important topic in UK society today. And what we're trying to do at HSBC is try our very best to limit that pain for customers. And Ian, I think that's really important we try and do that. There are many customers who will be worried about their new mortgage payments. So please get in contact with us. We're here to have the conversation with you. We're here to try and help you through. But I don't think rates are going to be falling anytime soon because, as you know, Ian, this is all linked to inflation, and inflation's ended up being more sticky than we all anticipated.
All right, Ian, got to leave it there. Busy day for you. Do appreciate you sparing the time to chat. Thank you.
Pleasure. Thanks, Ian. Take care. Bye.
Still to come here on Ian King Live. Why students are calling for more technology lessons at school, including esports. Stay with us. Welcome back. Now, if you sometimes grumble about the amount of time your kids spend on playing computer games, you might be better off leaving to them their own devices. Research from Dell Technologies and Intel suggests that esports holds real value for young people and helps them develop key skills required for the world of work. The two companies have now entered a 2-year partnership with the British Esports Federation, aimed at promoting esports as an industry fostering 21st century skills, new career pathways and economic growth for the UK. Well, with me now are Steve Young, he's Managing Director UK of Dell Technologies, and Chester King, he's Founder and Chief Executive of British Esports. Welcome to you both. Steve, I mean, my problem with all this is that this is based on interviews with 11 to 17-year-old students. I mean, I'm sure if I asked my kids, would you spend more time doing maths or playing computer games, I can guess what they'd say.
Yeah, I think we can all guess what they'd say. Yeah. The interesting thing, so Dell and Intel have done a survey, and UK students, so 82% of them would like to see more technology in the curriculum at school. And 50% of them believe that that would lead to better jobs. Now, a recent government report states that 80% of vacancies in the UK right now need digital skills. And then if you also look at the business element, businesses say one of the inhibitors for their growth is availability of great talent. So if you take those factors together, the fact that our students want more technology and both business and government want to see better digital skills because they believe it will help the workforce of the future, then I think we have a unique opportunity to build that digital savvy workplace of the future.
What I'm taking away from what you're saying, though, is that as an employer, a very major employer, schools are not really equipping kids with these skills right now.
I think the schools do the best job they can. I mean, teachers, we all know, work really, really hard. But another element to this is that if we were to set up something like an esports qualification in schools, then I think the latest report we saw from the students is that they believe that would help them with STEM, with their science, technology, their engineering and their maths as well. And when I was a parent of younger children, I probably found it difficult to make the connection between esports and STEM. But if you look at the way they gameplay, you know, the systematic thinking, the way they analyse data, the evidence-based strategies, and you add that to the digital skills that they're enhancing, then I think we're onto something. And I remember when I was a kid at school, a long time ago, I acknowledge, I was best at the subjects that I was most passionate about. So if we can harness and leverage that passion that our students have and combine that with esports, then I think, you know, we're building a digital savvy workforce of the future. And that's why I'm delighted that Dell Technologies and British Esports have announced this partnership.
So, Chester, what would a qualification look like? I mean, we should say there's already a BTEC out there in esports.
Yeah, so we're just finishing year 3 of our BTEC. We've had 5,500 students in the UK just complete it. But we've got about 50% of FE colleges doing that. What I love about this research is it's kind of encouraging schools to kind of look at esports as a curriculum. And you're probably aware that there's been some level 3 reforms anyway. So I think it's perfect timing. We've got, for example, coming up Olympic Esports Week, where we're going to have our country representing ourselves in the tournament, and also we've got the Euro Games. But the BTEC at the moment just gives a whole range of skills that are transferable, not just obviously in esports, but also into cyber, big data. And in the UK, the biggest employers of esports people are the sports industry. So every Formula 1 team has an esports team, every Premier League team has an esports team. But also going into kind of the armed forces as well, they want people with different skill sets, and esports and the BTEC that we're doing delivers that.
Is the current generation of school kids more attuned to this kind of stuff than previous generations? I mean, even ones who are maybe only a few years older than them.
Yeah, so what's fantastic is in the UK, from a higher education point of view, we've actually got 14 universities now you can study esports, and there's a new university called the College of Esports in London that's just dedicated to esports. So, yeah, really exciting.
Wow. I mean, and what about the schools themselves? Are they equipped to deliver this?
Yeah, so the classroom, you know, you most obviously have a PC, and obviously it's about training the teachers that, you know, one could say that the kids know a lot more than the teachers, but I think we're seeing a real appetite and a learning. You know, in our survey, I think it was over 43% of the teachers were saying that they want to help and understand about, for future employment, you need future skills and you need future qualifications. So there's a real engagement and the passion. You know, I love talking about esports as an active media. So you've got passive media, social media, but for me, esports is a real active media. And when people understand, and thank you for the opportunity today to talk about it, you know, once people understand about how positive esports is and the passion for these people to learn and use it as a tool, then, you know, we're doing our job.
All right, Chester, Steve, we'll leave it there. Good to talk to you both this morning. Thank you.
Thank you.
Just a reminder of our top breaking story this hour. It's been announced that Silvio Berlusconi, the former Italian Prime Minister, has died at the age of 86. Obviously, Italy's longest-serving post-war Prime Minister. We'll have a lot more on that story coming up after this short break. He was also, of course, a very, very successful businessman in his own right prior to entering politics. Well, Jane Secker is up next with all the latest reaction to news that Silvio Berlusconi has passed away. I'm back at 10 o'clock tomorrow morning. Hope to see you then. Cheerio.